Hello and good morning, listeners. Welcome back to Almus Market Mornings, your quick glance at the global financial markets with Jayaram Krishnamurthy. Now, folks, many in India would be in the long weekend mood, but the financial market doesn't look like to be in one. Rather, yesterday's PPI data from the US might have pushed the sleeping giant of volatility a little bit, just trying to wake him up. Today's inflation update from the US can further attempt to do so. But JK, do you think it will be successful? I mean, there's also some sort of updates like the New Zealand Central Bank cutting rates and a lot other updates. So, JK, what's your take on the financial markets right now?
Hey, good morning, Shikhar. Yes, we are in the season of rate cuts and easing policies. Many central banks, including ECB and UK, have cut the rates. Of course, I'm leaving Japan out. It's a different ball game in Japan. But yes, Canada has cut more than once, and then now latest is New Zealand, which has cut the rate today. But it was an expected. I would say it's not an expected move, but there was a dovishness that was developing in New Zealand. Based on the price developments, etc. Yes, come back to US economy. The PPI number yesterday was quite soft, both on month and on the year on year. And what was comforting was the significant fall in services inflation. This is quite in contrast to earlier trend of goods prices falling and services prices being higher, and it was the roles were reversed yesterday. Goods were actually higher and services was falling, and importantly, even the core inflation came down both on month on and year on year. Market valued the fall in core inflation more because that directly feeds into the core PCE number that the Fed considers in their policy decision. So obviously this is taken as a very positive data from market, and we can see that there is more than 55% probability of a 0.5% rate cut by Fed in September, and at least 1% rate cut by the end of this year. Even OIS rates have dropped overnight, giving rise to more expectation of easing policy by the Fed. And so bond markets were quite jubilant. 2-year yield dropped by almost 10 basis points from the highs. 10-year yield fell about 8 basis points from the high. And what was also heartening was change in the tone by one of the Fed members, Mr. Bostic, who said the rate cut is coming by the end of the year if the economy evolves as he expects to evolve, and the balance of risks are getting back to normal. And he also said that the recent inflation data gave him more confidence that inflation get back to 2%. And that's a departure from the statement that we have been hearing from Powell for quite some time now. He also saw sharply cooling labor market, although he did not expect a recession. So all this fed into a jubilant market, I would say, in bonds, and then even in the stocks. Stocks have continued to recover after the big sell-off that we saw after BOJ rate hike, and then since then the first phase of recovery was after BOJ deputy governor said that they are not in a hurry to hike rate again. And then market stalled, and now this PPI news. Perhaps if CPI also comes softer, or at least as expected, we could expect the continuation of the recovery in the markets. So overall, it's a positive environment. One more thing that added to was that no escalation in the Middle East geopolitical crisis. No fresh bad news was reported, and markets were quite upbeat after that. And we have seen the recovery continue in Asian markets as well. As far the currencies are concerned, dollar index took a hit, of course, across all the currencies. What we have seen post July 31st BOJ hike was that it was yen which was recovering broadly against all other currencies, and currencies remained somewhat weak against the dollar because of that. However, now what we have seen is a broader dollar sell-off against the major currencies. Euro, in fact, has made a dash towards 1.10 level. and cable has, or rather the GBP has moved towards 1.2850, quickly recovering after stronger than expected jobs report yesterday. And even the wage inflation was under control, which means that it is a good development. Although the BOE, rather the bank, UK officials have been quickly pointing out that they need to do a lot more to get the job market into more balance. So we may expect another at least one rate cut from Bank of England this year, if not two. It's only the Eurozone that is a bit concerning, because the ZEW sentiment data from Euro area as well as in Germany came much lower than expected, and that really puts a question mark over the recovery in the region. But it is surprising that Euro recovered despite these data. It only goes to shows that a month back, Euro was getting sold heavily on the basis of political uncertainties in France, and those positions have been fully reversed. And now the focus is on yield differential, which is narrowing with the US, and that's what the market looks at. Where the yields are contracting in reference to USD, the dollar gets sold, and that is what is happening. And one would not be surprised to see that even the rupee, the resilient dollar against the INR, yielded yesterday in NDF market came down to 83.90, and it's trading around those levels. And of course, important thing would be to see whether the central bank would be off the market today, in case there were to be some supplies, and that can take the market down another 10 paisa or so. But then till yesterday, what we have seen is good outflows from FIIs, and almost more than 1 billion of net outflows for this month, after having been in the positive in the initial days of the month. And then if this can stop, and if we see bond inflows coming, because the possibilities of bond inflows resuming is high, as bond yields across the globe is dropping, particularly after the inflation number in US has shown further tendency to drop. So we may expect, and important to see whether RBI absorbs those flows at these levels, or it would wait for some lower levels to absorb. So all in all, softer dollar. Finally, the dollar index itself is standing on a very strong trend line support near 102, and a breakup that can, on a sustainable basis, of course, can lead to further falls in the dollar. I think today's CPI holds a key to a lot of things: yields, dollar, and also the stock market. Thank you, and of course, have a great Independence Day tomorrow. We'll come back again on Friday.
Thank you so much, JK. That was really good. And yes, folks, there is one sleeping giant in our domestic markets itself. It's the USDINR, which has shown, as JK mentioned, some glimmer in the NDF markets, but barely any movement otherwise. So it needs to be seen whether the central bank or the market participants brings the USDINR prices lower on the backdrop of the flows. But on the flows, as of now, for the month, we have seen $1 billion worth of net outflows from the markets by the foreign players. Apart from that, a stronger than expected jobs update from UK pushes UK pound higher against the dollar, while the recovery from the Eurozone is put to question, looking at the ZEW sentiment. On the US front, as JK mentioned, yes, folks, we have had a good services inflation moderation and the core inflation cooling, which pushed the interest rate cut probability to 55% of a 50 basis cut in this September round itself. So it needs to be seen how things go ahead with the financial market. But that's it for today, folks. Have a good Independence Day celebration, and we shall come back again on Friday with another round of updates. Thank you so much for listening.